Dallas City Council has officially banned all Airbnbs in residential areas. 100% of them. This will cancel over 6,000 Airbnb listings, even if you've been operating for years. Mortgage rates remain stuck near 7%, and inventory across the board is slowly but surely rising. But what does all of this mean for the Dallas housing market? My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends, which cities and zip codes are the hottest if you may be looking to sell your property, as well as which cities and zip codes are the coolest if you're a buyer or investor looking for a deal. We'll also be tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator of what demand is going to look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, inventory, and if you stick around until the very end is my favorite part. It's a top 10 ranked list of the hottest and coolest both cities and zip codes in all of Dallas and all of Collin County. So you don't want to miss it. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is June 26th. Let's see what the data is telling us. And if this is an old video, you can hopefully click on the playlist here and it will take you to the most recent market update. First up is market news. So Dallas City Council officially bans all Airbnbs in residential area, which is pretty much like all of them. I'll be making a full video on this later this week, probably around Wednesday. But in summary, my opinion is it will have very little impact on the housing market. At first, you may be shocked to hear that this affects over 6,000 listings here in Dallas, but when you zoom in further on the data, there are actually only a few hundred units that were dedicated Airbnbs. That is, whole houses booked more than 50% of the year, or what I would call a full-time Airbnb. And even 50%, I don't even know if I would call that full-time, but even so, it's somewhere in the 600 to 800 range, and that's not even counting that a lot of those are probably back houses. In other words, I'm looking for owners who may be forced to sell their house because of this rule, and there just aren't many. So there's not going to be this big flood of listings. There's not going to be 6,000 homes hitting the market. In fact, there may not be any homes hitting the market. As well as, I don't think this order will stand anyway. If you want to look up Senate Bill 929, this was passed and made effective immediately on May 19th of 2023, and it basically states that if you bought a property as an Airbnb and that was allowed at the time that you bought it, if they change the zoning regulations now and made it illegal after the fact, then the county must either purchase that home from you or compensate you for your losses. Do you think Dallas is going to go and pay all of these people for their Airbnbs? Not a chance, and I think this goes away before December when it's supposed to go into effect. Not to mention, I have no idea how they would even plan to enforce this. Obviously, I'm not an attorney, but the verbiage seems very clear. If you want to read the bill for yourself, I'll link it down in the description. And if I've already made the full video, then the link will pop up somewhere here. Okay, moving on, let's look at interest rates. Okay, last week we started at a 6.94, we went up to 0.95, down to 0.87, and we ended at a 6.92, so 0.02% difference between the start and finish, so we're starting this week at a 6.92. Almost no change at all. As you know, historically, rates being above a 6.5% has meant demand is drying up. Rates below 6.5% means people are coming in and people are buying. People are applying for mortgages, and that's when the market's heating up. But starting back on May 21st, if you'll remember, when rates shot back up around 7% and stayed there ever since, we had a 4-week straight decline of people applying for mortgages for a cumulative 14% decrease. Then last week, out of nowhere, we saw an 8% increase in people applying for mortgages, which brought us back up to demand only being down effectively 6% from when rates shot up to 7%. Then this week, we saw another 2% increase in people applying for mortgages. This means demand is only down a net 4% from before rates shot up to 7% and stayed there, which again shows us buyers are getting off the sidelines and accepting these higher rates for what they are, which is temporary. When rates go down, they know they'll just refinance. In the meantime, they still need to purchase a home. As I say every week, if you can buy a house, then buy a house. There's no reason to believe it's going to get any easier from here. And if you're still on the fence about whether or not now is a good time to buy, please watch this video. And if you're still on the fence after watching that video, please give me a call. Okay, moving on to housing data. Starting with Dallas County, if you've watched my videos ever, you know that what I go off of is this, which is called the Market Action Index. It takes all of this data over here, puts it in one simple, easy graphic to read with an easy number. So we're at a 56. As you can see, from the time that rates shot up, what was that, around May 21st? So around this May 19th, 56.33, it's pretty much just remained flat. We're still around a 56. So you can see basically the market has just been frozen. No drops here, not in median list price. I mean, nothing has dropped. Days on market has remained the same. The amount of homes having price decreases is still within the same range. Inventory is the one thing that's climbing, but as I show you every week, that's not a significant climb, even though it looks like it here. We can look down here. We're still not even past this little bump right here. We need to get beyond this and then at least up to here before we start getting excited, which is around 3,800, and we're currently at 2,300. But I just want to say how remarkable it is we're up here, because in January, February of 22, we were at 800 homes on the market in all of Dallas County. That's crazy. So we're on the right path, but nothing to get excited about yet. Again, if interest rates drop at all, don't expect this number to continue up. So what I'm saying is rates have shot up to 7% and stayed there for over a month, and all that's happened is this tiny blip of inventory. So if you're a buyer, you're actually hoping that rates stay higher so that this will continue to go up. I know it sounds backwards, but that's your best shot at not being in multiple offers and competing against everyone. So if you're a buyer, high rates are good for now. Now we're moving on to Collin County. Same thing you can see, but actually it is cooler this month in Collin County than it was last month. And you can see that reflected over here for sure. Where Dallas was just flat, Collin County definitely has gone down a little bit. But I just want to say this is not a significant decline, but it just shows that Collin County is more sensitive to these interest rates than Dallas is, which is not surprising. Dallas is the hotter market between Dallas and Collin County. So basically, we're at a 51.36, which is about where we were of April 14th. So these high rates have just taken us right back to April 14th. But you can see we've been seeing a decrease in the median list price. Days on market has a little tick up, nothing significant. Number of homes having price decreases, again, this looks dramatic, but 35% is a totally normal number. Inventory, again, looks to be climbing, but not anything significant yet. So all you need to know about this, Collin County is a softer market than Dallas, and we'll see what happens if rates continue to stay high. So if you're looking to buy and Collin County is an option, it's definitely going to be easier to get something there than in Dallas County now and in the future. So looking at the Collin County inventory, it's much closer to its previous peak of 2008 at 1712. But you know what's really crazy is there was a time, February 18th, 327 houses. We had 327 houses in all of Collin County at that point. And now we're up to 1712. So good news is we're trending in the right direction. Bad news is we still got to get way up here to 4,500. So in order to get there, I think rates would have to stay high or go even higher for at least probably a year, unfortunately. And if you want to be put on a market report like this that will look exactly like this, you can do it by county, but it's better if you zoom in by specific city or even specific zip code where you live. Then shoot me a text with your name, a good email address, and the location that you want to be set up on, and I'll get you set up, and that will send out weekly. Okay, now we're moving on to my favorite part, the top 10 lists. However, unfortunately, the zip codes are just not loading this week. They must be having a server-side error, but if you want to go to last week's video and look at the top 10 zip codes, it's usually the same 10 zip codes. They shuffle around a little bit, but at least you can see if your zip code is in the top 10 based on last week's video. And remember, these charts rank out of all 84 zip codes in Dallas and 26 zip codes in Collin County. So it's a big deal if you make the top 10. Okay, starting with this week's hottest cities list, Grapevine, Texas remains number 1. It's been there for as long as I can remember. Carrollton heats up 1. So Carrollton, which has been at number 2 for a long time, got overtaken by Saxe last week, but it overtook its number 2 spot right back this week. Balch Springs moves up 4 spots, so Balch Springs is really heating up. Duncanville moves up 1. Louisville cools off 2. Plano moves down 2. Irving moves up 1. Grand Prairie jumps back onto the list after not making it last week. And Richardson moves down 3 spots and knocks Coppell entirely off the list. So some big changes in the hottest cities this week. Hopefully by next week we have our zip codes back. But moving on to the coolest cities. So this is pretty crazy. I can't remember this ever happening, but all of the coolest cities remained in their order, except Sunnyvale heated up 1 and Royce City cooled off 1. This is the only change, with Sunnyvale moving up 1. So to me, that just shows these cooler and less desirable markets are literally just frozen with these interest rates where they're at. Moving on to inventory, this is the weekly and this is the 90-day moving average. Finally, we're starting to see on the 90-day, some of these are showing a definite curve up. Whereas we've been seeing it on the weekly. For example, look at Frisco, how big of a curve it's got going up. But you finally start seeing that on the 90-day, as well as Plano's got a nice curve up, Royce City, Rockwall, and that's it for the 90-day. But if we look at the weekly, Allen also has a very big curve up. But again, this reflects Collin County, which is Frisco, Plano, Allen, is starting to have more inventory because it's cooling off quicker, because it's more sensitive to those rates, because it's a second tier in desirability compared to Dallas County. That's it for this week. Thank you so much for watching. And remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thanks for watching. I'll see you in the next video.